For now, though, let's turn our attention to Nigeria, where rising levels of non-performing loans and an imminent fall in the Naira's value have put banks in a very nasty position. On one hand, they need to raise fresh capital, but at the same time, the economy they want to raise it in is distressed. Capital isn't exactly cheaply available right now. Now, checks do show that the capital adequacy ratio of a number of mid and large-tier banks is at the threshold stipulated by the Central Bank of Nigeria. And that essentially means that in the absence of additional capital, a slight depletion of that said capital will force a number of these banks to fall below the minimum level required by the CBN. Now, this, of course, comes amid predictions by economic and financial experts that the Naira could fall, at least on the official interbank market, to anywhere between 350 to 400 Naira to the dollar this year, compared to the current rate that hovers anywhere between 305 to 315. Let's dig a little deeper into the details of this story. Deji Badmus is live in Lagos tonight. He's got more data here from Lagos. Deji, NPLs doubling essentially in percentage terms, at least, from 5.3% by the end of December to well over 11% in terms of sector assets by the end of June 2016. Where do they stand right now?
Well, Rama, we do not, the figures are not out yet, but of course we've had figures of somewhere around between 13 and 15%, which of course is worrisome. But what the CBN has been maintaining is that the situation has not reached an alarming level yet, and that there's no cause for alarm. But of course, we do know that the situation has actually gone beyond the CBN threshold. The original threshold, of course, as you know, was 5%, but it's actually gone beyond that. And as you've said, the last figure we saw sometime in December last year was 11.7, but there's no question at all that the asset quality of most of these banks have actually weakened as a result of course, their exposure to some sectors of the economy, and because of the fact that the economy at the moment is not doing well. But in terms of the current figure, we do not have it. We understand it's hovering between 13 and 15%.
Right. Let's talk about concentration of these non-performing loans, because the oil sector is one of the parts of Nigeria's economy that's been doing particularly badly. So where exactly or rather, how much of these NPLs are concentrated in the oil sector, and how are companies struggling to service these debts?
Well, for the oil sector, as a matter of fact, accounts for the bulk of the non-performing loans. We understand it's about 30%. Most of these banks are actually exposed to these oil companies, and that one of the reasons why the size of these non-performing loans is actually high is because of what we have seen in the oil industry. I mean, the price of oil going down, and then militancy in the Niger Delta region. What we know would happen is that if the price of oil continues to sustain at the current level now of over $50 per barrel, and the government is able to check the militancy in the Niger Delta region, everyone believes that the oil, we might have, the situation might be addressed, because you would have a situation where the oil firms will be able to repay their loans, and everyone will be happy. As for the manufacturing sector, which is around 12 point something percent, of course, we expect that if the economy picks up and the issue of forex is sorted out, manufacturing will definitely pick up, and then you would have a situation where manufacturers will be able to repay their loans. Now, if all these things are done, then things might improve. But worst case scenario, if things don't change, if the price of oil suddenly falls down again, and then the problem in the Niger Delta is not resolved, then there's no question at all that it will be terrible for the banks, because we will see further weakening of their asset quality. Rama?
Indeed. One last question for you, Deji, because there's a lot of ifs that you've listed there, but let's focus on the worst of that lot. The last set of stress tests published in June last year indicated that the most vulnerable were the mid-tier and the small banks in the Nigerian sector. So let's say, for argument's sake, that all the negatives you've mentioned do come to play. Are we likely to see another AMCON-style rescue for the banking sector?
Well, first off is let's just hope those negatives don't actually come to play, because everyone is positive here, Rama. But I do not think we're going to see another kind of AMCON bailout, because as we speak today, even AMCON itself is struggling to make those recoveries. I mean, you know the problem AMCON is going through. I don't think we're going to see that. The CBN has been giving every assurance that the banking sector is still solid, and that if there was any problem with any of the banks, it would be ready to inject funds. We've seen the CBN do that with the case of Sky Bank, for instance. If you remember, Rama, last year the CBN had to intervene, and of course, as you know, it changed the management of Sky Bank and injected funds into that bank. So, well, the CBN has maintained that there's no cause for alarm, and I don't think we're going to see another kind of AMCON bailout, because AMCON at the moment is having a very serious challenge with recoveries. So I don't think that would happen. What we are going to see is that the CBN might have to step in to inject funds into some of these banks if of course, those negatives, as we've been talking about, if they actually come to play. But the hope is that those negatives won't come to play, and that things will change. Oil prices will continue to go up. And you know, the economy will pick up, as we've been told that the economy will recover in 2017. If that happens, of course, and of course that's a big if that happens, no question at all that the banks will begin to bounce back again, and we'll see this size of non-performing loans going down drastically.
Indeed. We'll leave you there for the time being. Thank you for your input. That's Deji Badmus, of course, live in Lagos.